Good day guys, you're welcome to the channel. So today we'll be talking about the different types of chart patterns which you can make use of in the financial market. Now we have the M pattern. So these are just four patterns from the different chart patterns. So in other video we'll talk about how to make use of other patterns. For example, we have the M pattern and we have the W pattern. Now the M pattern can be called double top, while the W pattern can be identified as double bottom. There are several types of categories which we talk about in the mentorship. So those in the mentorship already understand the different types of patterns. So we also have different variety of head and shoulder, but we are just using these major ones. So we have the head and shoulder and we have the inverted head and shoulder. So the characteristics that makes up an M pattern, a double top, we can see this is the first leg. Now we have the second leg, and here we have the neckline. So immediately price breaks the neckline, this pattern is being formed. So it's very simple. Now until price breaks below the neckline, the pattern is not being formed. So that means until a candle close below this place, the pattern has not yet formed. So if we have something like this, the market might just hit here and start going up. So this point acts as the last level of defense. And immediately price breaks below it, we then see a change in the market that is usually sending the market downward. Now, on the opposite one, we have the W pattern. Now, the W pattern, you can see this is the first leg, and we have the second leg. Now, this is the neckline. And immediately price breaks above here, the market moves upward. Also, we have the head and shoulder. So let's talk about how to make use of the W and M pattern. So for example, we have something like this. This is a W pattern. We can see that on the higher time frame, actually the market is going upward. So we use multiple time frame analysis. There's a video I discussed about multiple time frame analysis, which is I think the previous video before this. So on this point, we look for a higher time frame price moving in a trend in a higher time frame. Then when price comes back to hit a zone, for example, let's say this is a resistance, price breaks it and comes back to it, it changes to a support. Now we come to this point, we can see that in the smaller time frame, this is a smaller time frame, we are looking for price to form something like a W pattern. And immediately we see a W pattern, we enter a buy order here for the market to go higher. Now this is for an AW, then which is also called a double bottom. Now for an M pattern, it's just same. We can see that the market is going lower, and as the market is going lower, it comes back to a zone. So this is a previous support. When price breaks a support, it changes to a resistance. Now some people prefer using a supply and demand. For example, price comes back to this supply zone, they look for pattern. So for now, let's just keep it very simple. When price comes back to this previous zone, which is a support, it changes to a resistance for the market to go lower. Now on the smaller time frame, this is what we usually look for. So we'll go into live chart for you to see different examples. So we'll look for an M pattern at this point for price to go lower. So also with the head and shoulder, so this is just one way of using it. So the head and shoulder, we have the first shoulder, we have the head, and we have the second shoulder. So immediately price breaks below the neckline, then the head and shoulder pattern is being formed. Now, when we are using these different diagrams to explain, markets might not perfectly show this perfect diagram. So sometimes there is little dispersion in identifying the patterns. Most likely 80% or 90% of it reacts in the same way. So also we have the inverted head and shoulder, we have the first shoulder, we have the head, and we have the second shoulder. So this is called inverted head and shoulder, and we have the neckline. So immediately price breaks above the neckline, then the inverted head and shoulder is being formed. So we can see that this is for when the market wants to go down, you're looking for sell, and this side is when you're looking for buy. So let's just identify it. This two is so when you're looking for bullish or buying opportunity, while this is when you're looking for sell. So let's go to the diagram before we go to the live market. So for example, we can see that this is a higher time frame, and this point is called a resistance. So you can call it arrow, which symbolizes resistance. So this is a resistance. Immediately resistance is broken, it changes to what? It changes to a support. So, and on this side, this is the smaller time frame and this is the resistance. So because of the fractal nature of price, we can combine two or more time frames for us to build our decision making process in the market. So here becomes our support. So the price gets to this point, we can see it forms a head and shoulder. This is an inverted head and shoulder. We take a buy, Meti price breaks the neckline. So Meti price breaks the neckline, that means the pattern has been formed. So Meti price breaks this neckline, then the pattern has been formed. Also similar to this is the inverted head and shoulder. Meti price breaks the neckline, the pattern has been formed also. So we have this, Meti price breaks the neckline, the pattern has been formed. So then for the W pattern, you can see this is a W pattern. Meti price also breaks the neckline, we take a buy. Here, Meti price breaks the neckline, we take a buy. And also for the M pattern, the Meti price breaks the neckline, we take a sell trade. Here, Meti price breaks it, we look for sell. So let's go to the live market to see different examples. So let's say for example we have this is GDP AUD. So one thing you can also add as extra confluence. So what we mean confluence is just mean combining different features to help build more confidence in your trade. So example, we can add a moving average. Let's say we add a moving average of 50. This is a 50 moving average here. So how to add a 50 moving average? You can come to indicator, just write EMA, and you'll see exponential moving average. So let me delete this, and so just come here, you click on setting. I believe you already understand it. So you click on setting and install a 50 moving average. So it's just for you to add to your building your trend bias. So for example, we have a trend here. This is a higher time frame. We are using H4 and H1. So this is a very simple way you can trade. You can also modify it to scalping and also swing trading. So for example, we have this for just day trading. You can see that this point here, this is a resistance. It held price from going up, and Meti price breaks it. It changed to what? It changed to a support to push the market higher. Now, and also you can see that prices are far above this 50 moving average, meaning the trend is healthy. Meaning price, if anytime price is far from the moving average, it means the trend is still healthy. So all you look for, you can map out your zone here. You can see here. This is on the higher time frame, just as we stated on the drawing. Now what do? You go down to the smaller time frame. So we're just using H4 and H1 for this. So in the mentorship, we go deep. We also combine more than two time frames and other time frames for you to build more confidence in your decision making. So once you come here, you are looking for a pattern. So this is smaller time frame. Let's remove the moving average now. So all you look for is your pattern. So here you can see that here we had something like this. When you are to buy is at the break of the neckline. Now where is the break of the neckline? Somewhere here. So Meti price breaks above it, you take your order here, and your take profit depending on you. So you can take your take profit around here. So this is just an idea on how you can make use of chart patterns. So just looking at this, we take our trade here. So also if you want to see the pattern clearly, you can change it to a line chart. So when you change it to a line chart, you see it very clear. So in the mentorship, we'll go, I believe everyone in the mentorship already understand the different types of chart patterns, the different types of, so everyone in the mentorship already understand the different types of M pattern. We have around 3 or so, 4. So guys, let's move to the next example for a bearish example. So for example here, we can see that currently the market is doing what? At this point is going downward. So the trend is down and we are making use of a chart pattern. So all we do, we draw this is a zone. You can see this is a zone. Why? You can see here previously the market rejected from this point, the market rejected from here, and the market finally break it and is back to this point, meaning it has a chance of reacting to this point to go down. So this is previous support, and when price breaks the support, it changes to what? a resistance in the market to push the market lower. So we go down to the smaller time frame, which is the H1. So remove your moving average. So this is the H1. So if you look very clearly, what do we have here? We have we have a head and shoulder here. A head and shoulder here. You can see this is the first shoulder. You can see this is the head and this is the second shoulder. When price break the neckline, we take a trade downward. So this point here, this is the neckline around here. Now, if you're not seeing it clearly, you can go down one time frame lower, which is 30 minutes. Let's say, for example, we open our minutes and we go down to 30 minutes. You can see it very clear. We have here. So on 30 minutes, you can see that we had a head and shoulder pattern here. And after that, what does the market do? The market go lower. So on trading head and shoulder, you can just take a short position around somewhere here, a stop loss around here, and you take profit. You can take some of your profit around here or target the next zone. So this is just an example of how to make use of head and shoulders, and also how to make use of the M pattern. So in next video I will go more in so in next videos I will cover more different types of patterns and how to make use of them in the market. So for example, we have the Euro USD here. You can see previously that price broke this low here. This point, immediately price breaks it. So immediately price breaks a support, it changes to what? A resistance. So all you have to do is to go to a smaller time frame. Example, this is a daily time frame. You can just go to 4 hours. Now, immediately price breaks there, come back. What do we have here? We have a W pattern. You can identify it here. So immediately price breaks below and come back here. What do we have? We have a M pattern. So you can see this is the first leg, the neckline, the second leg, and immediately price breaks it, the market went down. So here you look for a sell to take the market lower. You take a sell here, your stop loss just above here, and you take profits all the way down here. So this is a simple way of trading M and W in the market. So let's go to one last example before we call it an end. So let's say, for example, we can see also that the GBP USD was going downward. So we can see that we are having a trend which is going downward. So immediately price breaks this low and comes back to here. So what do? You just go down to your smaller time frame. This is daily time frame. You go down to your 4 hours time frame. So you can see that this point, this previous support, and immediately price breaks a support, it comes back, it changes to what? A resistance. You go down to your smaller time frame, which is 4 hours, and what do we see? We see an M pattern. So this is the M pattern. This is the first leg, this is the second leg, and this is the second leg, and this is the break of the neckline. So at this point in time, this is the point where you look for a sell. Now there are two ways you can look for trade when you're trading with pattern. For example, if the market is in this form, we have this here. If you have this, so what you can do is you can just look for trade when price is breaking this low here, something like this. So if you take trade from this point, your risk to the world will be higher. So native price tamper this high as taking this high here. That means people's stop loss has been taken out and we create a new higher high. You just look for a trade at this point. Native price close below it, you take it and you target the next low. Now when you're doing this one, is for example like this point here, you can see that this zone, if we do it like this, price came up above, took out people's stop loss, and what do? You take a sell, immediately price breaks below it. Thank you guys for staying to the end of the video. Don't forget to like and subscribe to the channel, and if you're also looking for a trading community to call home, you can also check our Telegram group, which is on the comment section and also on the description section.